Hello, fintech leaders and builders. I'm Vin Solo from INSART, the Fintech Business Accelerator, and this is our next episode of the Guts, Grit, and the Fintech Podcast, the show for the founders, entrepreneurs, and investors who are not afraid to take smart risks to deliver the sellable products and build the brighter financial future. We will dive deeper into what it means to be a sector specialist in fintech venture capital, how to combine domain expertise, strategic partnerships, powerful global network to help startups shape the future of financial services. And we will explore this with someone who has built one of the most trusted fintech-focused venture firms in the industry. And our today's guest is Mark Beeston, founder and managing partner at Illuminate Financial Management, which is a thesis-driven venture capital firm investing in companies defining the future of financial services. So since 2014, Illuminate has built a portfolio of over 50 fintech startups, achieved 10 successful exits, and formed partnerships with industry giants like JP Morgan, Barclays, Citi, and others. Mark, welcome, and it's a pleasure to have you with us today.
Thank you very much for having me here. I greatly appreciate it.
Yes, absolutely. And Mark, so let's set the stage with some numbers. Illuminate now counts over 50 portfolio companies, 10 exits, partnerships with some of the world's most respected financial institutions. So could you please walk us through what is the scale of Illuminate Financial today? So maybe like the size of the funds under management and how your investment thesis has evolved since 2014. What are the most prominent exits of your portfolio companies that you have done?
Yeah, sure. Well, as I say, thank you again for having me. It's kind of funny as we start here, you're asking me what the metrics are, and I'm looking right over your shoulder at a copy of 0 to 1. I remember setting this business up just over 11 years ago, and everyone's always very interested in what you're doing, and you really are just trying to get the machine to start turning. As we sit here today, we're not the biggest VC in the world, but big enough to be interesting. So we're about $500 million of AUM. We're on the ground and partner-led out of all the major financial centers. So my partners run the business out of our London headquarters, as well as New York and Singapore. Team is a little over 20 in size, with a little over half of that being investors on the team. And we've been, I think, genuinely blessed to be operating in an environment where it sounds like a very 2025 or 2024 thing to say, but I've been saying this since we set the business up. The exit environment in our world, which is institution-focused fintech, is very trade sale driven. And so, the majority of those exits have been driven by incumbent industry acquirers, and we've got some incredible names in the list. We've sold businesses to Bloomberg, to PayPal, to Carta most recently, a couple of secondaries along the way. So in a world where investors are starved for distributions, right, we've been able to kind of keep that process moving, and that's good for everybody.
So as I understand, Illuminate, one of the Illuminate's power is clearly the network and the partnership with dozens of financial institutions who also play the follow-up investor role. Yeah. And some of your portfolio companies have even been acquired by companies like Axel, Salesforce, PayPal, Citi, Fidelity. So how does this network work in practice? How do you leverage to accelerate portfolio growth with the help of this network? And also, what are the strategic benefits for the founders out of this strategic network?
Perfect. I should definitely qualify that the list of names that you gave is a list of more a list of follow-on funders than acquirers. Although, we have, I think we've sold one of our businesses to one of our LPs, which was S&P. But I got a really useful lesson in the power of networks very early on in my career, way before Illuminate, because I joined Deutsche Bank as a graduate trainee right before Deutsche started its massive fixed income transformation. And that was all about bringing in the best people that were connected to the people that you needed to know, right? And that's been a kind of consistent theme in my career ever since. And when we decided to launch Illuminate, it was always going to be leveraging the network that had been built over time, building on it from there with the help of the team around me and my partners. But really creating a virtuous cycle, right? And so we were very fortunate to be backed into our first fund by what at the time was Market, which is now S&P, and Deutsche Börse. Those two companies have gone on to actually anchor all four of our funds. And to that, we've added a significant number of names, 7 global banks. We have around a dozen strategic LPs across our 2 actively deploying funds today. And it really is this very virtuous partnership. So we are talking to our partners under NDA to understand what challenges they're trying to solve for themselves or for their clients. We're sharing with them not only the best of our portfolio, but also the best of our pipeline, right? To really help us understand what does good look like in terms of solving the problems the industry wants to address. And again, worth taking a step back, everything that we invest in is technology, but we don't invest in technology for technology's sake, right? The financial sector spends more on technology than any other sector, apart from the technology sector itself, right? So the addressable market here is enormous. And with our partners, we're able to become better investors because we understand not only where that spend is today, but where we think that spend's going tomorrow.
So am I right that when you say partners, and these are predominantly the large financial institutions who are your investors, who are also the clients for your portfolio companies, and also some of them acquirers of your portfolio companies when they exit. Is it correct?
That is correct. And I mean, here's what I think is a really interesting statistic, right? When Citi became an investor of ours for the first time, they came into Ventures 3. They'd actually already invested, not acquired, not used the product, although they often were using the product, obviously, but had directly invested in a full quarter of the companies that we had invested in at the time. So we'd made 32 investments. Citi had already invested in 8, right? So yes, they have roles to play, as both, wallet for revenue, potential onward investment, potential onward channel partnerships, potential acquisitions. There are many ways that those partnerships can help. But the real value, I think, starts with the fact that institutional sales is typically quite tough. Sales cycles are quite long. The revenues are very sticky. But what we're able to do through our network, and our formal partner network is really the sharp part of the spear, is make warm introductions for early stage founders to the large institutions that they want to build relationships with, right? And being able to walk in recommended and warm to the right person at the right time is just massively invaluable in terms of improving the efficiency of that long go-to-market motion.
So speaking about the fintech startups you invest in, as I understand, Illuminate invests in companies that are solving key business problems specifically for the financial institutions.
Yeah.
And we at INSART, for example, have seen a number of trends going on in 2025. So obviously AI, but it's not only like would you use AI, but what are the specific use cases that will actually optimize the workflow? So basically how you would use AI efficiently. So the other trend we're seeing is infrastructure. So a lot of fintech startups and companies specifically developing the infrastructure, like the players who control like integration, APIs, orchestration. So they are looks like they're starting to dominate the ecosystem. And also we're seeing like having the US as primary market for ourselves. We're seeing that still US is the ultimate price, and a lot of non-US companies are trying to launch after the success launch abroad. They're trying to launch here in the United States. So what are the biggest problems and what are the biggest trends that you see with financial institutions, and what are the biggest like challenges they are facing today that you are most excited to back solutions for right now?
Yeah. So I think you hit on a lot of it. We're very thesis driven. So I think the easiest way for me to answer the question is to sort of talk about like what are each of the sort of top level theses that we kind of treat as the windows to go into this market through. The whole business was originally founded over what I believed was a moment of generational change in financial markets infrastructure. And that was to say that we'd seen a massive expansion of financial services on first generation installed software, right? The build out of the derivatives industry is one great example. Post financial crisis, the operating environment changed forever, right? We saw, much more industry deleveraging, much more focused on capital. We saw massive multi-jurisdictional regulation. And effectively, the industry walked into a zero tolerance compliance environment. Okay, so for me, that kind of meant that for the first time, change in markets was less driven about pure competitive dynamics, and it was cost, control, capital, and compliance. Right. Those challenges, remain, right? Like we are, still in the foothills of that transformation. So there's a huge opportunity there. But alongside that, there are these other generational changes that have come along in the decade or more that we've been operating funds, and those are just as exciting and just as relevant. So the institutionalization of digital assets, right? Like what is the emergence of traditional finance? And how is it going to leverage digital asset rails, and what does it need to do that? So that's a huge one. Private markets, private credit, wealth transition, wealth management, another sort of huge generational shift. Sustainable finance and the energy transition, driving a lot of opportunity. And then last but not least, I think the window that you came in through, we've always invested in enterprise tech where it targets large financial institutions. Obviously, at the moment, that conversation is dominated by AI. Of course, 10 years ago, it was dominated by data privacy or blockchain is going to eat the world. And so, again, trying to kind of pass down what is real and where there's sustained business value is the really exciting part of the challenge.
Yeah, absolutely. So, for example, we at INSART, we work only with the B2B startups who either develop the SaaS platforms or infrastructure, but we really see the trends this year turning more to infrastructure, APIs, integrations, rather than building some kind of SaaS platform. So like enablers for the financial institutions, I would say.
Yes.
And also you mentioned that, so basically Illuminate is the thesis-driven venture capital company. And one of the criteria you have is the stage of investment. And would you say your typical investment stage is like between something like late C to Series B?
Yeah, I think that's exactly right. I mean, our original series of funds, Ventures 1, 2, and 3, are very much Series A and late seed focused. So typically that means you have a product, you have product market fit, the usual way of knowing you have product market fit is you have some revenue. And then we launched our first Series B fund later last year. We'd made the first three investments out of that one as well.
So when we look at the startup at the late seed stage, what kind of traction and validation more specifically convinces you that they are actually ready for investment from Illuminate?
Well, I think you've got two really key factors in there, right? There's like you asked explicitly about traction, which is a product question. And so as I mentioned, ideally you've got some sort of production contracts. Obviously, if you've got, several of them, then that starts to demonstrate that there might be a repeatable product market fit. We have invested in businesses with no revenue. We have invested in businesses that just have POCs with potential production cutovers, but we definitely prefer a number of validated sales. But as important as that is, I think more important is actually like who are the team, what are the characteristics of the team, and the charisma, the leadership, the nuclear energy that's required to bulldoze through all of the challenges that you have when you start a business is absolutely vital as well.
So let's talk a little bit more specifically about the founders. So when you first meet a founder, so what are the positive signals that would tell you they might be among the few who can actually scale further? Because you never know, like especially if it is a first-time founder. So It's easier with the second-time founder, but like with the first-time founders, it could be really, really hard to predict.
Yeah, it's really interesting. One of the reasons I actually really enjoy doing these kinds of conversations is because it really reflects the light back on you and makes you think about, crystallizing your answers. The reality is, I actually think the single most important thing when you meet a founder is, can you have an honest debate with them, right? Because if we take it for granted that, you're not going to invest in somebody that, doesn't have charisma or energy or, understanding of their market or, or a product or what have you, right? The biggest challenge is we want people that are coachable, right? And coachable doesn't mean we tell you something and you follow it. Coachable means we can have a conversation about it and then you can decide what to do, right? And so at the very earliest stage, if you're able to actually throw things into the conversation that you can agree to disagree about, right, that's actually a really good sign. But if I look at situations where things haven't worked out, right? Somebody asked me the other day, they're like, when a company runs into challenges or problems, is it always impossible to see? And the actual answer is no. In many cases, it's actually really easy to see. It's just the founder doesn't see it, right? And so you need to be working with people that are going to assimilate new information, and you need to understand that they are that person on the way in.
So, Mark, you actually touched a very interesting topic regarding coachability of the founders, because we have seen a lot of examples when we have seen what would work and what wouldn't work, like go-to-market strategy. Okay, and we see that the founder is on the wrong way. I mean, we can suggest why and the red flags and why it will not be successful. Again, it's the sole responsibility and accountability of the founder to build their company, and that's it. But anyway, how would you recognize that this particular founder is coachable, especially when they are arguing with you and you know that this wouldn't work because it's never worked before, okay? But they are convinced it would work and they want to try. So how would you say if this founder is coachable or not?
Well, I mean, firstly, I don't think there's a totally foolproof mechanism, right? And you identified it yourself in the positioning of the question. The simple reality is that the CEOs and founders of these companies are the people that run the companies. We are not the people that run the company, right? So ultimate executive authority sits with them, right? And that's part of what you're buying into, right?
Absolutely.
But I mean, I met a founder for breakfast yesterday morning, Sunday morning, really, really interested in what they're doing. My team asked me how it went. And I was like, really great. He was as interested in understanding our business as we were in understanding his, right? We were able to bat things backwards and forwards. It was a flowing conversation. Like, this is a flowing conversation. It wasn't just a pitch, right? And again, coming from a trading background, things that make great traders are decisiveness. They decide when something's right, but they assimilate new information. And when they realize that something is no longer right, some may even call it wrong, right? They either get out of the position or they reverse the position, right? And so again, it's quite hard to really truly get to know how well people assimilate new information and whether they even appreciate new information being shared with them. But really trying to get to the bottom of that as you go through, the initial meetings and then, due diligence on a deal, I think is absolutely key.
Okay. Got it. One more question on the investment thesis. You're also saying that you invest something between like 10 to 20% equity stakes. So what does it mean more specifically for the founders? Is it kind of strategy to have the still minority of stakes, but have some control anyway? So why this strategy specifically?
I think it's a pretty common venture norm to kind of target double-digit stakes. We're no different there. In an early stage business, you want the founding team to have plenty of skin in the game, right? They are often working for either, next to no compensation when you're first meeting them, or substantially below market compensation if they went and got day jobs. The reward of that is equity. It's as important that they have an equity stake that is relevant to their potential outcomes as it is that we have an equity stake that's relative to our potential outcomes. There are plenty of businesses that we've walked away from because, in fact, there was one literally last week where, we love the product, we love the founding team, but there's something structurally wrong with the cap table that, predates us and we can't fix.
Okay. So would you typically lead the rounds or join the rounds? Any strategy on that side?
Yeah, it depends on the fund. Our third ventures fund is our largest fund to date, $235 million, and that allows us to comfortably lead Series A rounds, particularly in our space. But equally, I always say there's no corporate ego, right? So we're very happy, we're very happy to follow, we're very happy to co-lead, as long as obviously we can get a stake that allows us to have a relevant outcome, which we kind of define as 10% plus. On the early growth fund, we're probably more likely to be a follower or a co-lead, simply based on the fact that, it's our first fund in that space. It's basically the same underlying strategy. It's just a different entry point.
So, by the way, I have seen the announcement that you just recently launched the early growth fund supported by strategic investments from S&P, Deutsche Börse, HSBC, and TD Securities. So, can you tell us what differentiates this particular fund from the earlier ones that you have? What type of opportunities are you targeting at this stage with this fund, and how does this strategic LPs, shape the value you bring to founders?
Yeah, so I think it's pretty simple, right? They are just marginally more mature businesses, right? I mean, typically, our definition of where a Series B is probably starting is, $5 million plus of revenue, right? Sometimes you'll see companies that raise money early on and, they're telling you that they've got a Series B, but they're only, at $1 million of revenue. We'd argue that that's a Ventures 3 investment rather than an early growth investment. So more demonstrable, more demonstration of the track record in terms of a few more repeatable sales, more mature metrics. And the way I think about it as it relates to the strategics is, I think the market's evolved from 10 years ago where every bank had a head of innovation and an innovation lab and a blockchain lab. And I think the rhetoric and the focus, thankfully, has moved on much more towards, applied innovation, like, pragmatic, how do we make the rubber hit the road? And the great thing about those Series B stage businesses is I think they are just much easier for a large financial institution to adopt, right? They're more likely to, have done their SOX compliance. They're more likely to have been through an MSA process with a couple of large institutions. And so I just think much more sort of institution ready at that kind of revenue and growth stage.
Yes, absolutely. So, Mark, to wrap up our conversation, probably a little bit easier question. If you weren't building and baking fintech startups, what other industry or passion do you think you would be dedicating your time and today?
Oh, well, I think passion's easier than industry. I'm a massive petrol head. I'm a car person through and through. In fact, when we meet people, if you went into Illuminate Slack, which obviously I can't allow you to do for data privacy reasons, if you put in #MassiveCarGuy, you'll find that we literally tag people because they know that I'll want to know them if they've got the same petrol flowing through their veins. So actually in the UK, I actually set up and still own and operate my own car dealership.
Okay.
So that's one of my first businesses. I don't have any pretense about how good a driver I am, but I have just an incredible passion for all things automotive.
Absolutely. That's really great. So, Mark, thank you very much for sharing your experience and Illuminate's vision for the fintech ecosystem. And I especially liked, I like about Illuminate that you're building this kind of ecosystem, so you can so that founders they can leverage actually this ecosystem, partnering with the bigger financial institutions, and especially for the early stage fintech companies or even late seed companies. Sometimes it's hard to partner with larger financial institutions, but when they would have such a partner and investor like yourself, it's becoming more easier to do. And also about the idea about the coachability of the founders. So I think this is really a great factor if the founders are really eager to adopt and to make the lessons learned and to change their direction if they can actually understand how to change this direction based on the feedback they have, etc. So I really like this. So thank you very much for joining us today.
A real pleasure. Thank you for having me.
Yeah, absolutely. And to all the fintech leaders and builders for watching us today. So make sure you subscribe, like, and hit the bell button to stay tuned for upcoming episodes with the top investors and founders who are shaping the next generation of fintechs. And it was me, Vince Solo from INSART Fintech Business Accelerator, and Mark Beeston from Illuminate Financial Management. Let's keep building fintech and brighter financial future together. Thank you and bye-bye.